Philippine government highlighted the country's current dynamic domestic economy and positive outlook. As the Philippine Statistics Authority (PSA) reported that the country's gross domestic product (GDP) grew by 6.4% in the first quarter of 2023. As the Philippines currently experience a dynamic domestic economy, this means that even if the regional and global economic environment would worsen, the Philippine economy has its own momentum and own dynamism to sustain growth. The reported GDP growth performance figure is well within the government's target of 6 to 7% for 2023. Furthermore, based on the latest available data from the top 40 global economies that have released their first quarter 2023 real GDP growth, the Philippines grew the fastest among developed and major emerging economies in the world. It was followed by India, expanding by 6.1%, Malaysia growing by 5.6%, Indonesia at 5% and China at 4.5%. The Philippines' gross domestic product of 6.4% in the first quarter of 2023 was the slowest pace when the country recovers from the pandemic in the second quarter of 2021. But beat analysts' estimates and fell within the government's target range. While this quarter's figure is lower than last year's 8.2%, this is mainly due to the low base effect of the previous year's growth. Currently, the economy is normalizing its previous trend and returning to the country's high growth trajectory. The higher-than-expected growth comes in an environment of high inflation and continued interest rate hikes. Though inflation slightly eased to 6.6% in April and 6.1% in May from 8.7% in January. Even if the prices are slightly high, if incomes are rising because of more opportunities for employment or the quality of opportunities is improving, then somehow, households can still manage to increase their consumption levels. Recently, PSA also reported that the country's employment rate has continued to climb, reaching 95.3% or 48.6 million individuals employed in March 2023. The Asian Development Bank also sees 2023 growth to be around 6%, riding on a wave of rising domestic demand and a revival in tourism, but dampened by inflation and geopolitical tension. Given the first quarter GDP results, the government maintained its target of 6 to 7% growth in 2023, and 6.5 to 8% for 2024 to 2028. With strong growth forecast over the medium-term outlook, the size of the Philippines' GDP measured in US dollar nominal terms is set to reach $1 trillion by 2033, according to the report issued by S&P Global Market Intelligence. This will make the Philippines one of the largest emerging markets in the Asia-Pacific as well as a leading emerging market globally. The average annual GDP per person has also risen dramatically over the past 2 decades, from below $1,000 per person in $2,000 to $3,500 by 2022, and is projected to rise above $6,000 per person by 2030. The strong rebound from the COVID-19 pandemic during 2022 helped to drive the pace of growth of the Philippines economy to the fastest rate since 1976. The Philippines' GDP growth rate of 7.6% was comparable to some of the world's fastest-growing major global emerging markets in 2022, including the Gulf Cooperation Council oil exporting nations of Saudi Arabia and the United Arab Emirates, as well as other rapidly growing Asian emerging economies such as Malaysia, Vietnam, and India. The Philippines has also shown a much improved economic growth performance over the past decade, apart from the peak period of the COVID-19 pandemic during 2020 to 2021 when there was widespread global disruption to economic activity. During the period from 2012 to 2019, real GDP growth in the Philippines each year ranged between 6% to 7%. The economic rebound in 2022 pushed real economic growth to the highest pace recorded since 1976, with household final consumption expenditure growing by 8.3%. While gross capital formation grew by 16.8% year-on-year. The near-term outlook for 2023 is for continued firm economic expansion. The latest S&P Global Philippines Manufacturing PMI survey results for March 2023 continue to signal expansionary conditions for manufacturing output and new orders. Sustained remittance inflows from workers abroad, fast-growing IT/BPO sector exports, and a recovery of the tourism sector are also expected to support economic growth momentum during 2023. According to the IT and Business Process Association of the Philippines, the total IT/BPO headcount in the Philippines reached 1.6 million in 2022, with revenues for the sector rising to $32.5 billion United States dollars. The long-term outlook for the IT/BPO sector in the Philippines is continued with high growth, helped by key competitive advantages of a well-educated workforce and English language proficiency. The Philippines economy is forecast to continue to grow rapidly, with total GDP doubling from 400 billion United States dollars in 2022 to 800 billion United States dollars in 2030. A key growth driver will be rapid growth in private consumption spending, buoyed by strong growth in urban household incomes. By 2033, the Philippines is forecast to become one of the Asia-Pacific region's small group of $1 trillion economies, joining mainland China, Japan, India, South Korea, Australia, Taiwan, and Indonesia in this grouping of the largest economies in APEC. This strong growth in the size of the Philippines economy is also expected to drive rapidly rising per capita GDP, from 3,500 United States dollars in 2022 to 6,200 United States dollars by 2030. This will help to underpin the growth of the Philippines' domestic consumer market, catalyzing foreign and domestic investment into many sectors of the Philippines economy. The Philippines is poised to become the world's 18th biggest economy by 2050, as long as it addresses its infrastructure lack. A long-term projection, made by London-based macroeconomic research organization, Capital Economics. As projected, the Philippines' nominal gross domestic product, GDP climbing to $4,862 billion, 3 decades from now. Such that nominal GDP per capita would also rise to $33,650. In the latest forecasts, showed that by 2050, the Philippines would only be behind the following countries in terms of nominal GDP at market exchange rates: the United States, China, India, Germany, Japan, the United Kingdom, Indonesia, France, Canada, Australia, South Korea, Mexico, Russia, Vietnam, Italy, Brazil, and Egypt. The Philippines will also benefit from its membership in the recently implemented RCEP trade deal, particularly due to its very favorable rules of origin treatment, which provide cumulative benefits that will help to build manufacturing supply chains within the RCEP region across different countries. This will help to attract foreign direct investment flows for a wide range of manufacturing and infrastructure projects into the RCEP member nations, particularly into low-cost manufacturing hubs such as the Philippines. The Philippines has gotten a good deal from China through the Regional Comprehensive Economic Partnership Agreement. In a statement from National Economic and Development Authority, NEDA Chief Arsenio Balisican, the infusion of the Philippines into RCEP will provide a much bigger market for the country. It signals to the world the readiness of the Philippines to do business, and it also means the country has respect for trade, customs, and labor rules and conforms with global practices. Under the RCEP, the country would have to conform to international standards once it starts shipping its products, particularly agricultural produce, overseas. RCEP comprises the 10 ASEAN member states, and its trading partners Australia, China, Japan, Republic of Korea, and New Zealand. Entered into force on January 1, 2022, the RCEP is an initiative led by the Association of Southeast Asian Nations, ASEAN, which the Philippines is a member. It is considered the world's largest free trade area in terms of the parties' combined gross domestic product, GDP, which is almost a third of the world's GDP. The framework also opens access to a market size that accounts for almost 1/3 of the world's population. Consequently, the outlook for the Philippines economy over the next decade is very favorable, with significant progress in economic development expected. In 2021, the Family Income and Expenditure Survey of the Philippines government indicated that 20 million people, or around 18.1% of the total population, still live below the poverty threshold. Rapidly rising per capita GDP and standards of living will help to underpin a broad improvement in human development indicators and should deliver a significant reduction in the share of the population living in extreme poverty over the decade ahead.